In this video, we will look at what it takes to start investing in today's market, and we will begin right now. As a new investor, you are probably ready to go and anxious to buy your first stock, but perhaps you are not sure what to buy. Do you buy a share in your favorite company, or should you be looking at index funds? What about cryptocurrency? And then we have the financial YouTubers who are all at it, making you feel like if you don't buy the stock they are peddling, you'll be missing out on becoming a millionaire. Holy banana bread. Who should you listen to, and what does it all mean? You already put in the time to get ready to invest, and yet the levels of confusion leave you not sure what to do next. My goal in this video is to try and set up a less confusing path forward for you. Before we take those first steps, let me know in the comments if you are new to investing, or for the old hats, what was your biggest challenge when you were new? I am very grateful to see you all here today in the home of free financial content on YouTube. If you are new, please subscribe right now so you won't miss a single moment, and a huge thank you for that click. Before you start investing, hopefully you have taken the time to get your overall finances in shape. That would include setting a budget, setting aside an emergency fund, and removing all of your bad debt from the table. The next step is to figure out financial advisors, brokers, and your overall investment goals. Knowing where you are going really can help us see how you need to get there. The first big question is, do you want to do this yourself? Or do you want to use and/or invest through a financial advisor? I am thinking if you are here, you may be leaning towards the do-it-yourself model. If you are looking for a financial advisor, there are lots of options, from a professional advisor in a brick-and-mortar office to an advisor at your bank to robo-advisors such as Wealthsimple Invest. With this path, you simply give them your money, they take their fees, and then they invest it all for you. No muss, no fuss. I will add that you can still do it all on your own, but consult with a financial advisor to get a heaping of financial advice. When it comes to where you want to invest, there are lots of options from banks, credit unions, and online brokers. If you are like many of us in this community, your biggest deciding factor will be paying as little as possible in fees. One big way a lot of the banks make money is by charging you commissions on every single trade you make. That can really add up to more money in their pocket while less in yours. For that reason alone, I believe a commission-free broker is the way to go. Well, that certainly narrows it down to National Bank, Wealthsimple, and Mogo Trade. I will recommend Wealthsimple or National Bank over Mogo Trade, only because Mogo Trade is brand new and untested to my standards yet. If you do want to try Wealthsimple, which is what I use, there is a referral code below which will give you a bonus of up to $3,000 simply for trying them out. Full disclosure, I get the same bonus, so it is a plus for both of us. The average payout is normally about $10, but I have known people who have gotten the full amount, so good luck. Once you know which broker you plan to use and you have funded your investing account, it is time to look at where are you going to put your stocks. You will typically have a few different accounts within your broker to choose from. You will have a personal account, or sometimes they call it a cash account depending on who your broker is, a tax-free savings account or TFSA, or of course your registered retirement savings plan or RRSP. A big mistake new investors often make, and I made it too, is putting their initial stocks into their personal account where their capital gains and dividends are taxable. You do not want to pay more taxes when there are tax-free options. The TFSA is a much better choice for initial investing. It will allow your stocks to grow and dividends to roll in tax-free. There is a limit to how much you can contribute, and that contribution room grows each year. To find out how much room you have, you can log into your CRA account and it will show you your maximum contribution room. That total can, of course, be shared over multiple TFSAs, provided their totals all stay within that contribution limit. The RRSP is also an option, but it is not tax-free, but rather a tax deferment solution. You do not pay any tax until you withdraw it, usually after retirement. The RRSP does tend to be more of a strategic choice. We're not going to get too much into that in this video, but we certainly will in a future one. Once you know where you are placing your investments, it is time to start looking at just what you plan to invest in. Now, if you are planning to invest in cryptocurrency instead of stocks, you can still use Wealthsimple for that, but you would hold that within your Wealthsimple crypto. However, I do usually recommend that you get comfortable with investing before jumping into crypto. So getting back to that question, how do you know which stocks to buy? That is where a little thing called due diligence comes in. That means you need to research the stocks you're interested in purchasing. The fact you are watching a YouTube video right now makes me think YouTube is where you will start. That is great. However, you need to be careful not to use what you hear in the YouTube financial verse as gospel. Some YouTubers, not all, but some, are really good at overselling bad investments. You kind of need to follow a few general rules. Is the video sponsored? If it is, then keep in mind the YouTuber may be biased on that stock. Is a YouTuber making it sound like the stock is the biggest opportunity of your life? It probably isn't. You want to put more faith in those YouTubers who are more down to earth when it comes to the stocks they are talking about. Even then, you still want to do your research in addition to what YouTube is telling you. A YouTuber is only the beginning of your research. There's a lot of other resources out there, and we will look at some of them in future videos for sure. Should you be buying individual stocks or index funds? That will be up to you, but I do have an opinion on that. If you only have a small amount to invest, such as, let's say, $100 a month, then it does make sense to gain the instant diversification you can get with an index fund. Exchange-traded funds, income trusts, and the like will give you a basket of stocks opposed to just a single stock. Diversification simply means that by spreading your money over multiple stocks, multiple sectors, it increases the safety, the overall safety of your portfolio. Not only is a basket of stocks a much safer investment, it also lets you get your feet wet while you continue to learn about stocks and gain a few investor levels along the way. Full disclosure, I did start with individual stocks after I did a lot, and I mean a lot, of research. I still think a basket of stocks is a better choice initially for most new investors. One of the next big questions that comes along is, should I be a dividend investor or maybe a growth investor? When I began investing, dividends were like a drug, and the idea of building passive income really resonated with me. Because of all that, my earlier versions of my portfolio were very, very dividend focused. That is not a bad thing. But today I still have a strong dividend portfolio with a much heavier emphasis on total return. So what exactly do I mean by that? A dividend portfolio is simply chasing those dividend yields to create as much passive income as possible. A growth portfolio often ignores dividends and stacks within growth-heavy stocks so they have smaller passive income but heavy growth. A total return portfolio looks purely at the return of investment and strives to look for good dividend stocks that also have really good growth. This sort of portfolio tends to have the best of both worlds. And just in case there's one or two of you out there wondering what exactly are dividends, they are simply a small portion of a company's profits that they choose to share with their shareholders, in this case you, in the form of a payment or dividend. There's a lot to take in when it comes to the investment world, and I only really scratched the surface in this video on the new investor experience. One of the greatest resources I can offer you is the gateway to this community. I may be the one making the videos, but we have a fantastic group of investors within this community. Down below, there's a link to our Facebook group. Feel free to join and ask questions there. As well, feel free to ask questions in the comments as I do my very best to get to every single one. The fun does not have to end here because you can always watch my video on emergency funds that I have linked on the left for you, or you can check out the video on the right that YouTube thinks you will like maybe a little better, maybe not. Your click will decide who is right, and I will see you in the next video.